Clearly, lots of plans changing, being forced to change as a result of oil. The Bank of Canada hoping this rate drop will help. Our senior business correspondent, Amanda Lang, says tread carefully.
As you noted, Peter, until recently, the conversation in this country was when rates would rise. Few expected a cut. Of course, few anticipated that the price of oil would collapse in the way that it has. Well, the central bank clearly hopes to help stimulate this ailing economy. The rate cut presents some challenges, too. For one thing, lower rates actually encourage borrowing. And with household debt already at 163% of income, nobody wants Canadians to take on new debt. One place it may happen is with new mortgages. Here's a look at the interest rate on 5-year bonds. They're the ones that help drive mortgage rates, and they've been falling. Today's move sent them even lower. TD won't follow suit, but other banks may lower the mortgage rates they're willing to offer homebuyers. The fear is that could draw people into an overheated housing market, and when rates do go up, those mortgages become unaffordable. Stephen Poloz also said a lower dollar will help manufacturers and exporters, and that may be. But the dollar has been falling steadily since last July, along with the price of oil. And while exports have picked up slightly, it's hardly been a miracle cure. The real signal that may be sent with this cut is just how serious Canada's economic position has become.
Well, what about that? How serious does this suggest the situation is?
Well, it's a bit the equivalent of calling the fire department. When it happens, you sort of assume there's a fire. Even Stephen Poloz acknowledged that there's a lack of certainty. He said so today because the current weakness has been driven by lower oil prices and nobody really knows what will happen there.
We want to make sure that if there is more downside risk, that we have appropriately positioned for it. But we must remember that the world changes fast, and if it changes again, we have the ability to take out more insurance or, quite on the reverse, to reduce how much insurance we've taken out. But at this time, we simply don't have that kind of pinpoint accuracy that would allow a fulsome answer to that question.
The bottom line is when your central bank governor expresses that degree of uncertainty, it doesn't spread confidence to consumers. And of course, Peter, as you know, that in itself has an economic impact.
All right, Amanda, thanks very much.